Good morning, everyone. Steve Georgie here from Allendale's Trading Floor. It's September 8th. We've got the markets giving back a lot of the gains that we had seen on Friday. A late push, and actually I should say a steady push higher there Friday, and then that late push as well, closing very strong for most of the grains. We're giving some of that back. Corn right now down 6 3/4 cents. Beans down 7 1/4, with wheat down 8 3/4. So was that a buy the rumor, sell the fact type idea because of the cold weather coming in? That was mostly a weather rally on Friday. But at 6 o'clock this morning, the GFS models came out almost identical to Friday's cold temperatures that we had rallied on before. So when you look at this, really, what's going to be the coldest? Wednesday through Saturday, western North Dakota, they're talking into 32 degrees for certain areas. Can there be some damage? Yeah, there sure can be. Probably more so to beans. But how widespread is this going to be, or what? And that's what the market is going to try to focus on here early this week. So continue watching these models. Some weather forecasts are putting out that it's not going to be that bad, and there won't be much damage, if any at all. Others are saying that there may. So the market's going to really try to play this back and forth game up until that Wednesday through Saturday time frame. So we've got that to look forward to this week. Not only that, we got crop conditions coming out today at 3 o'clock. So conditions expecting to stay steady, or maybe even to improve, which would be, I guess that would be tough for this time of year. Usually we see good excellent ratings decline as we see things mature, and so any kind of an increase right now is going to be kind of eye-opening. That would be more of a record. If you look at the levels where we're at right now, if we do see that stay steady or increase, that'd be a record for September. So continue to watch that. Not only that, you got USDA having their supply and demand report out on later on this week. So we've got weather, we've got conditions, we've got supply and demand report. What does that mean? That means these markets are probably going to remain volatile this week. So get yourself prepared for that. Get yourself covered if you can. Or give us a call. We'll be glad to help you work through some different strategies on what to do. Looking at managed money last week, with that big rally that we saw on Friday for corn, they ended up increasing long positions by 12,523, but they increased short positions for their beans and wheat, 3,634 for beans, and another just over 5,000 contracts for wheat. So continuing to see some selling there for beans and wheat. Looking at livestock. Steady to higher probably in cattle to start the morning. We'll see what happens then. But box beef, 55 higher in choice. Select up 156. We did see cash trade 160 on Friday, so that's $3 higher. We saw something just to kind of keep in mind, thinking of the cattle here, that's something kind of amazing. Cash cattle up $5 over last week, where futures rallied 14. So we've got futures right now trading way over the cash market. So kind of keep an eye on that too. That hasn't been the case over the last 6 to 12 months. So is this hype something that it needs to be sold, or is there more to it? So watch the cash market this week. That's going to be king on what happens with futures. Hogs, on the other hand, steady to higher, probably to open. Cutout values, though, down about 32 cents. We've seen a nice recovery for hogs as well, but we need to see if we're going to get any more extension up. So watch some technical areas out of the hogs. Stock market down 28 points right now. Gold down 2. Silver slightly higher, with the dollar right now continuing to increase, up 16. So that may put some pressure on commodities in general. If you guys have questions at all, give us a call over here, 800-262-7538, or check us out on the web at allendale-inc.com. Hope you guys have a great day. We'll talk to you again tomorrow morning. Take care.